gentlemen, ladies and gents, welcome to the Forex Light YouTube channel. Welcome to my YouTube channel. Thank you so much, ladies and gentlemen, and tuning in back again for more knowledge. You know, when you're hungry for knowledge, make sure that you tune in on the Forex Light YouTube channel, where you will get nourished by the most powerful free knowledge that is for sale in the forex industry. So me, I go deep with regards giving out the free for sale information from the one that I learned from my mentors, you know, ladies and gentlemen. So I'm here to dish out the information to you for free, ladies and gentlemen. Without any waste of time, make sure you click the like, subscribe, and the notification button so that you can get notified next time when I drop another banger, ladies and gentlemen. Thank you so much for tuning in this video again. As you all know, we're here to bring the light to all those who are still stuck in darkness.
Yo, what's good, ladies and gentlemen? It's your boy Primo Limo. We back again with another banger, ladies and gentlemen. So today I came in with another video that is very dangerous, that is going to shift your perception, is going to change your life when it comes to trading, ladies and gentlemen. So without wasting any time, I'm not here to waste any time. I'm here to drop this video to you so that you can learn how I accumulate, how I maneuver, how I find my journey throughout the chain, because I've been using so many systems, robots, strategies I've been through, and oh man, like only to find out that I didn't like them. Not to say they didn't work, but I just didn't like them. So today I'm here to drop another banger that is going to change your perspective. If you really like this one, then you can use it as well, because this is how I approach it, and this is how I've been profiting throughout the strategy. So without any waste of time, let's just jump into the charts, ladies and gentlemen, because this is all about the charts all day long. So from now on, going forward, this is the only strategy that you're going to be seeing that I've been dropping. So I'm not changing anything. I've been changing and I've been in a game, and like I've been through some trial and errors. So it's about time now that we change everything. So enough about that. Now let's just focus on what we are here for, of which is the new strategy that I'll be dropping today for y'all to maneuver with it. So first things first, as you can see, we're on TradingView, ladies and gentlemen. So each and everything that I'm going to be using here is free, so you can get it for free here on TradingView. So you have to register with your TradingView and then go and make use of it. So I am trading the SMC, the smart money concept, but using the price action approach. Remember, we all have different personalities as to how we approach this system and how we maneuver on the market. Remember, trading is a personal thing, so you need to choose one thing that you're going to be comfortable with. You get that? So each and everything that you're going to be comfortable with, so you need to choose that and make sure that you grab it and run with it and never look back. So I've been on the strategy and touched it just a few. I didn't like it, or maybe I didn't understand it that time, but now I understand it to the fullest because I did my research. I've been trading so many strategies, so combining it with all other strategies. So I'm not using ICT concepts, but I know them as well. So this is SMC. I'm strictly SMC. I know ICT is a concept, it's not a strategy, but me, I'm using the SMC, the smart money concept, plus the price action. You get that? So without any waste of time, let's just jump right into it and show you how I maneuver through the market. So first things first, remember the high time frames. They will give you the market bias, they will give you the overall direction, but my highest time frame is the H4. If I mark the H4 and I see what's going on, and then I'm good about it. So I'm just gonna like zoom out so that you can see my whole chart. As you can see, there's this indicator over here, which I'm gonna mark it, this one, which indicates the trend, ladies and gentlemen. So this one shows you that the market trend is on the uptrend. As you all can see over there, it shows that the market trend is on the uptrend. So now that we are on the uptrend, good, we know what is it that we have to do, which means we have to be focusing on the buys only. You get it? So we will be focusing on buys only because the overall trend is the uptrend. So we're gonna be buying, buying and buying all day long. So without wasting any time, let's just jump right into it. And I'm gonna go on and remove this. Come on, erase. Yeah, God, this is gonna like take the whole day. Let's see if we can go back. Uh, yeah, great. So moving forward, and then from the H4 you check your overall direction, ladies and gentlemen. So before I can even go on, let me just show you the indicators that I use here. I use these two indicators, of which is the smart money concept by Lux Algo. So go and check it. It's for free, you can use it. And then this one makes it easier for you because it marks everything for you: the break of structures, the change of characters, and so forth. Even the fair value gaps, it shows that if you want to like make use of the fair value gaps. But me, I make use of them. So I use the Fibonacci retracement, I use the fair value gaps, and I use the order blocks. I don't use support and resistance. The 10 lines, I just use them to see the direction. But if I'm good about the direction, so there's no need for me to jump into other tools that I can use. So these are the only tools that I use. So the TSR, you just go into indicators here, and then you search TSR. If you type in TSR, it's going to show you this. This is it, ladies and gentlemen, the TSR. So this is the one. Search TSR by Isma something. Yes. And then you click it and you put it as part of your thingy. And then the smart money concept, because remember I'm using the free version. So this free version, this one is going to be good for everyone who's still using the free version. So they will be able to make use of the indicators for free. So I don't know how long will we have access to the free version, but DMN. So I don't see any necessity of me paying for this because I can use make use of these two indicators and then do my thing. So I don't want to like waste more time. Let's just jump right into the settings of the indicators. So as you can see, my smart money concept, these are the settings that I use. It's going to show right now. Let's give it some time. Yes, let's go to the input. So as you can see, I'm just going to go scroll down quick. So if you want to check copy the settings, you're going to pause the video yourself. So this is what I did. Can copy everything and anything and anything and anything and anything. So yeah, this is it, ladies and gentlemen. Even the colors, I try to change my colors to suit my needs there. Then the style, as you saw, visibility, yeah, and so on. So these are my settings for the smart money concept. And here on the TSR, I didn't put my settings. You can choose your options here: open bar, once per bar, or close. So me, I use the open bar one. And then the points to check and everything, you can check here. As you can see, this is it. And the style, so it's still, everything is still in check. So we're done about the indicators. So now let's moving forward to approaching the strategy. So this is the MEMO618 strategy, because I'm using so many things, because I can just like call it MEMO618. That's the name of my strategy. I call it the MEMO618. So using the MEMO618 is very easy, ladies and gentlemen. You don't have to look so many things. These ones all together, all these indicators together with the way you're going to approach it, is gonna make things easier for you. So I also use the parallel channel. So the parallel channel is for me to actually see the trend of the market. So I'm gonna start drawing my parallel channel on the H4. As you can see, my parallel channel, we already got the direction from the TSR. The TSR or SFT or TSR is already got the direction from the TSR, of which is telling us that now the market is bullish. So as it's bullish, then now we're going to mark our lows, to mark our trend, to see exactly why are we bullish. You get it. So you can put the shortcuts as well, how to do that. Then you can do your research there, find a video on how to put the shortcuts and everything. So I did that, and this is my H4 trend. As you can see, my H4 trend has been broken, and then now the market is retesting it, and now it's trying to push towards the upside. As to where to, I'm not sure about that, and we'll see when the market goes on, because this is what I care about for now. Do you get that? So I'm not a swing trader. I just hold my trades if I have to. And yeah, so it depends on how you want to use it. If you want to use it for swing, then you can swing with it. If you want to scalp, then it's going to be you using the smaller time frames to maneuver through your trading style. You get that? So yeah. And moving on, because I'm done marking my H4, now I'm going to mark my H1. As you can see on the H1, we're still on the bullish trend. The system already marked it for us that okay, we're still bullish. We're confirming that we are still bullish. So which channel are we seeing here on the H1? Because we can see now the market was bouncing and bouncing and bouncing. So how are we going to mark this channel? What you can do is this: you can mark the higher one, of which is it made the highs, the touches and everything, and mark this lower one here. You get it? So because these are the bounces that the market is doing, so we're trying to mimic the direction of the market because it's the uptrend. So we're marking the overall structure that we see on the H1. You get it? So now that we're done marking the H4, we can just delete the H4 to clean our chart, to keep our charts clean. Okay, we just marked it there. H1, we see that we have the first touch, second touch, and then the market now is still pushing within the channel. So we're still pushing the channel because this is our major highs, as you can see over here. This is our major highs, this one and this one. So we mark those ones to actually mimic the direction of the market. So as you can see now, the market is playing within this channel. So as soon as you break the channel, so we're going to have to see how we're going to mark our new channel or our new structure. You get it? So moving on to the smaller time frame, we're going to go to M30. Or before we move on to M30, let's go and mark our H1 channel, the trend. We have to mark everything, ladies and gentlemen, to see where you are so that you won't get lost along the way. Because once you start zooming in and zooming in, then there you're gonna get lost as to where am I? What did I do? What's the market? What is the market doing at the moment? Okay, now as you can see now, we have this bullish trend. So now we're going to mark it with our parallel as well to see as to where is this bullish trend or channel taking us. Okay, we're just going to mark it here because here we already see that the market is broken this channel. So and now it's trying to push to the upside. Let's just mark it here for the sake of this tutorial. Okay, and this high as well. So we already got our channel clear. So now we're going to mark this one as the M30 because this is where we marked our channel. Then we're done with the channels. We're no longer marking any channels. So once you reach the M30 channel, you're done with your channel. So now what are we going to look for? We're going to zoom in. And now we're done with the channel. So now because we're done with the channel, so we're looking forward to getting our entries. So how we're going to get to mark our entries so that we can enter the market? Okay, cool. I'm going to talk about the current situation. I'm not going to talk about the past. As you can see, we know that we are bullish. The market is bullish. So as you can see, the market here, it gave us the change of character of which we were supposed to be selling this order block over here. But we're not going to sell this order block. Reason why? Because we know we are what? On the uptrend. We are overall bullish. So we're not focusing on these ones and we don't allow them to distract us. So the only thing that we do, we're focusing on what? Placing our buys or waiting for the change of character. So the change of character is the same as the break of structure. So it can still give you the entry criteria as well. So you can still use it to enter the market. As you can see over here, I'm going to show you an example. So before we can continue with our entry points, as you can see, this system, it marked the highs and the lows. You see this is the high that it marked and here is the low. Is making things easier for you so that you can understand as to where are you on the market and what is it that you must do. Do you get it? So as you can see, our highs and lows here, so we're going to make use of our Fibonacci retracement tool. So our Fibonacci retracement tool is going to help us to know where exactly the market is likely to reverse or retrace. You get it? So I'm not marking any zone. Remember, I'm not marking any support and resistance here because the market if the market gives me that structure of the support and resistance, like for example, let's go back, because I know there's so many people who like, hey, where's your support, where's your structure, where did you mark your levels? Like, I don't want to complicate my trading now. I want to keep things simple and follow the simple approach so that I can prosper the way I've been prospering since I started this approach. So I started trading this approach long time ago, and now I say that okay, now it's about time that I can share it with the public and give it to you guys for free. So we're gonna be embarking on the same journey, which is the MEMO618 trading strategy. So yeah, I wanted to show you the support structure where the market was consolidating, but I think I'm gonna waste time with that. But you'll know, if you don't know what is the support and resistance, then you can Google search. There's so many videos about the support and resistance here on the market. So me, with this new approach, I'm not using the support and resistance. I'm just using the highs and the lows. Highs and the lows. To me, it's the high and the low. Simple. If they equal, they equal. If they not, they not. Simple like that. All I need is the direction of the market, the trend, and the retracement so that I can enter my trades. So moving on. Now we have the retracement. This is the retracement that we had over here. I'm just gonna like start over here and show you how did this go. Okay, let's say now we seeing this market now change the character and is trying to push to the upside. Do you get it? So we're gonna mark this low and this high over there to get the retracement, right? Okay, cool. So since as well now we have this high and a low. So these are the settings for my Fibonacci. If you need my settings for the Fibonacci, here are the settings. Just gonna change your colors and everything. So this is what I did so far, and then the rest there on the bottom I didn't change anything. So this is what I did. Okay, so then you're gonna put your rectangle, because I don't want to like cloud my chart there and make it daily or something. So this rectangle is gonna be marking our buy golden zone. Our buy golden zone. So every time when the market comes in here, we go crazy. You can put your orders or you can execute manually. So this is what I'm going to be doing, the buy golden zone. So this is my buy golden zone, and I'm going to be putting my orders here from the 61.8, because this is where the market is likely to tap and push to the upside to get it. So the stop loss is going to be below the 0.88% retracement. So you can just put it on the line, but it's very risky because at times the market can trigger you out and then push to the upside. But remember, you can just keep it the way according to your risk appetite. You can just make it longer, or you can just keep it here below, just but like few pips below. You get that. Even your entry point, as you're gonna enter here on the 61, you can just put it just a little bit above here. Put your orders above on your MetaTrader or whatever platform that you're using, and then your stop loss, calculating your stop loss and your risk to reward. So remember now, because we broke the structure, we see that okay, the market is pushing towards the upside. You can aim at your risk to reward ratio, or we can target this high over here. As you can see, the TP is already hit. Thank you. So this is how you can approach it, and then from there, after you're done marking with your Fibonacci retracement, you can delete your Fibonacci, and you see okay, now you got your orders here, they triggered and went to a drawdown, and then came back again. If you see this, okay, the market now went to the downside and it's still coming back trying to push to the upside, you can still add more entries here. You can add more entries pushing the price to the upside to get that. So another thing that you can use, which is to scale in. You can scale in your trades along the way until the market reach the TP target, so that you can maximize your profits. Do you get that? So since you marked here like this is how you do all the way again and again. Remember, we don't use these what you call the bearish signal, so we're no longer using the bearish signal. So the market here broke the structure. As you can see, this is another signal, came back to the zone. You apply the same thing. Check your Fibonacci from the high, from the low, sorry about that, Fibonacci from the low to the high, and then you mark your golden zone again. you mark your buy entry zone, of which is this one and this one. Do you get that? This is your buy entry zone. Same applies to the sales. You do the same thing, but now I'll be focusing on the buy entry zone because the market is being pushed into the upside. So that ourselves the second entry, of which now we're aiming at that high as well. So we're gonna be, let's delete this Fibonacci. Now this zone, just delete this zone, okay, and just use the Fibonacci only so that we can mark our zones very well. Okay. So now we're going to be marking our zones. So for our zones, remember, is for the end. I mean, we're going to be taking our, we're going to be putting our entries. As you can see, this one just turned here on the 61.8, didn't even dive deeper. So like I said, you don't have to put your orders exactly on top, because sometimes the market can just like tap a bit and then push to the upside, depending on your broker, the spread of your broker. As you can see, now we've been killing the buys all the way. Remember, we're still holding these ones. So you don't have to rush to lock your profits. Even if maybe you can just push these ones and then take your profit, get out of the trade, and then the following day you wait for another one. But if you want to hold, then you're going to have to be patient and wait for this. You don't have to be adding more trades, because by the time the market retraces deeply, so you'll be on a status drawdown or stopped out of other trades. But to be on the safe side, you can just enter here and allow your market to give you the overall push to the upside if you are swinging. But if you're day trading, you can just aim for your risk to reward, and then you hit your TP and then you out. You get it, depending on your approach. But I'm just showing you the entries, the best entry points, and the best way to support the direction of the market. As you can see, when you scroll to the lower time frames, now our highs and lows are changing. So we're going to go ahead and delete these ones and this one here. Okay. So now that we are here, because these highs and lows, they've been getting marked here as the market has been pushing to the upside. So the system has been marking, it was marking these highs and lows and pushing towards the upside. So as you can see here, we already took our entry points. The market triggered us, and then suddenly it pushed to the upside, and then it hit our TP. So along the way, as the market has been going to the upside, let's delete everything here. The zone, delete for the market again. So as you can see, the market now did what? It broke the structure. Okay, this is the new one. Okay. Oh, this was the one that you traded here. It was this one, right? Okay, cool. Now let's go ahead and trade this one. This one inside here, this change of character over here. So now that we have this change of character, we see the market is pushing towards the upside. From the upside, it started retracing. This is the retracement that triggered you in, ladies and gentlemen, because there was the event here, if I remember very well. There was the event, but you're gonna see this clean entry here on a smaller time frame. So depending on the time frame that you'll be monitoring these entries. So going to a smaller time frame, as you can see, same approach. You can mark it, mark the high. As soon as you see the market dropping, retracing, that's the sign for you that now you have to mark your zones with the Fibonacci retracement. Since as well you've got that the first entry confirmation, second entry confirmation is the retracement, then you put your Fibonacci. Already know the direction, there's no need to worry about that. Then you mark your golden zones. Damn, man, this one is beautiful. Okay, cool. Then you place your orders on your MetaTrader. Remember, few pips away, not on the line, not here on the 68, but away. Remember that we're running away from the spread, that the market doesn't come here and reverse here without even triggering us, because sometimes if we put our orders here, it can reverse here without triggering us, and then like that's going to be a waste of the analysis. Remember, stop loss below 0.88. So the stop loss is going to be always be wider, but the rewards are going to be great, because you can hold your trades until you see that okay, now you are enough. You get that. So because this one is the New York session, so the New York session, you should be careful, because like it moves drastically, so you don't have to rush it. If you're trading London, okay, cool, you can rush it. But as you can see, the H1 trend was hit. Okay, this is the one that reversed here. No, okay, cool. Don't have to line trigger. Okay, As you can see, you could have held this trade when they start to reverse, and then yeah, that's when you're gonna be like exiting your trades. But it's a good trade. Hit the TP. If you're aiming for this high, you already hit the TP. And I don't know if it's the 1 to 1 or 1 to 2. Okay, let's see what. Okay, cool. Now the market came back and then changed the character. You don't get scared until we see everything changes on a higher time frame. That's when we're gonna be like, okay, cool. Now we don't have to be taking the price anymore. Everything changed. Our system is saying that we are selling, right? So now we're aiming at the price. No matter what traffic we might come across along the way, this is what we call traffic. So we don't have to worry about the traffic. We need to worry about the traffic whenever everything changes on the higher time frame. So I don't want to make this video long. So continuing, taking another entry point. Remember, when you're done marking your Fibonacci retracement, you put your entry zones, and then you put your buy or sell, whatever thing that they call it. This one here, buy and sell uh, indicator, or what. You get that this tool, buy and sell tool, and then you go to your metadata, you mark. Remember, you don't copy the labels and everything here. You just look at the candlesticks, because the candlesticks they're the same. So you have to look at the candlesticks and see which candlestick am I gonna put my orders on, not the price level, because the trading view price level and your broker's price level, those are totally two different things. So you don't have to copy that, because you're gonna get confused at times, and then you're gonna mark things in a wrong level. So you have to like look at the candles. Okay, this candle here below this red candle here, or you can mark with the candles. You compare the time frames, go to the same time frame, then you mark your candles accordingly. So coming to this one that we are currently on, of which we already taken, we are in this trade right now, ladies and gentlemen. As you can see, came back to our order block. Don't forget our order blocks as well. If the market didn't trigger your entry, okay, let's show this, because now we're gonna confuse people. If the market didn't trigger your buy golden zone or your sell golden zone, remember we still got the order block. So you can place your orders here, or you can place your orders on the order block, applying the very same approach. Also, not on the order block directly, but few pips away from the order block, so that you can be triggered to get it. First entry 61, second entry order block. Simple. Done. And then you come back this side using the very same approach. As you can see, we have a change of character. Great. We trade it. We don't wait for the order, for the break of structure. No. Change of character, we know we have to approach in. So we're gonna mark this low from here, as you can see, until that high of the retracement. Great. What happened? Now we mark the golden zone. Our golden zone is aligning with what? With our order block. Great, that's good news. That's a strong signal. So we're gonna be marking it as a buy golden zone, and then we're gonna be putting our entry points above just a little bit. Again, do not forget that one is very important. Stop loss below the 81, 88, just here on this low. You get it. So the swing is not that bad. Even if I put my stop loss here, it's not gonna be harmful. Or below. You get that. Already I'm hitting my TP1, of which is the high. But because I'm aiming at that high there, I can't be saying some dangerous terminologies of which you guys don't understand, the liquidity, what, this thing, and no. I'm aiming at this high. Simple. This is how I keep it. Very simple. This strategy can be used by everyone, newbies or people who has been trading but struggling with their profits. So you can use the very same strategy. This is how you do it every day, all day long, doing the very same thing. You get it. So this is it for me, ladies and gentlemen. I hope you enjoyed the video. If you really enjoyed the video, please click the like, subscribe, and share, and the notification bell for me when I drop more videos, so that you can get access to all the videos. From me to you, ladies and gentlemen, I hope you enjoyed this video. Thank you so much for watching. See you on the next one. Cheers.